Good morning, and you're very welcome to this Q&A live with me, Martin Brennan, chartered accountant with almost 20 years experience working with small to medium-sized businesses here in Ireland across a variety of different businesses and a variety of different topics I'd be covering in today's discussion. There's two in particular. Firstly, we're going to talk about revenue have released some statistics in relation to the PAYE workers for 2025. So it'll be interesting for any PAYE workers out there to see exactly where you stack in results of tax overpaid, underpaid. And as well as that, the most common question that came up last week was starting a business. So I'm going to devote 10 to 15 minutes in that particular. What I would do if I was starting a business, a real user's guide, basically, of how to start a business in a correct fashion. Not too much jargon in this, just an overview exactly what I would do if I was advising any businesses out there in starting a business. So we're going to kick today off with revenue statistics that have come out. And of course, there's a lot of PAY workers out there who would be interested to know exactly what the most common question I get asked when these things come up is, what should I be claiming back? And what do I need to do in order to claim back? A lot of businesses will use a facility like tax rebate or one of these firms who charge a percentage of the money that you receive in your refund as the payment. So it's basically risk free for the POE worker, and it's once the return has been filed and calculated, if there is a refund, they get paid and you get a balance of that. Now, just be careful when you're using operations like that, insofar as that you are aware of the percentage that's going to be taken, because the form itself, once it's filed, the refund goes into that bank account as well, belonging to the agent that you've used. So just be aware of that. And most importantly, if you have used an agent in the past and you are now going to do it yourself, you're going to file your own Form 12. Well, it's a good thing to do to make sure that you change your bank details into your own name. Otherwise, the refund will go back into the previous agent that you've been using, and you will have to go looking for that refund. And of course, they'll take the commission on that as well. So just be aware of that for any POE workers. And this leads on nicely to this topic for 2025 in relation to POE returns that have been filed. So to date, over 470,000 returns have been processed for individuals who have already filed their income tax returns for 2025. And of these, 381,000 have received a refund, which is encouraging to see that so many people are actually engaging with revenue early and getting these returns filed, which is fantastic. Claims wise, topic conversation always comes up. What should I be claiming back on? Number one is health expenses. We had 128,000 claims on that. The rent tax credit, which actually shocked me. I was a bit shocked to think that almost 99,000 people have claimed that, which is encouraging to think that it's only been introduced. I think this is the second or third year has been introduced as part of the budget for revenue and allowing landlords to claim a tax relief, but as well as that, for PUE workers who are engaged, and once the landlord is registered with the RTB, has a local property tax kept up to date, and of course, you are a resident and with them, and it's all like they are paying the taxes on this. It's not a cash in hand sort of a job. You are able to claim your tax credit on that. So that's great to see. The all reliable, the flat rate expenses, 82,000 on that, and remote working relief has actually dropped. It's down to 45,000, which means that more people are going back into the office, which is and not able to claim that that credit that has been introduced as well. But overall, what has been paid? So the POE preliminary statement, which have been issued, and revenue are encouraging anyone who has taxes. So you can go in and you can check. You can actually just submit that just to finalize your POE for last year, and you can see that there was an analysis done, and 1.5 million, 64% of all taxpayers have a balanced tax position, meaning that their liability is under or over €10. That means they're not claiming anything in addition. There's no rental expenses, tax credit, health expenses, etc. You've just got through 2025 and you haven't needed many medical expenses or medical claims on that. 627,000 have actually overpaid tax to the amount of 462 million. So it's a huge amount of money that's sitting there to be reclaimed. And of course, underpaid tax 210, which is always the dreaded, to the tune of 115 million is owed back to revenue on that. Where so I would encourage anybody, given those statistics, to get your statement of account on, and if you're a POE worker, file that. If you're not, if you're an income tax worker, start preparing your stuff for this year. And even if you were to get your accounts prepared, at least you have a good idea of what your tax liability is going to be. We haven't been given the date yet for the filing, the latest filing date for 2026 relation to 2025 tax returns. But look, by default, I would take it as being Halloween night, 31st of October of this year will be the date that would need to be filed. But if you have your tax return done in good time, you know what your liability is, you've got plenty of time to put away the funds in order to pay that tax liability as it falls due. Okay, going to move on swiftly to topic of conversation that comes up time and time again, which is in relation to new business startup. I was approached during the week by a person who was setting up a new, they want to set up a new company. They're consultant business and they have been working with a particular company, but an opportunity has arose that they can actually go in as a consultant to work in this particular business. And they've come to me asking me exactly what would be the pros and cons of this. Should I stay as a PAYE worker in this business, or should I go out on my own and set up a company? And there is some legislation around this in regards to the Just Eat drivers, where legislation and case law about what is the definition of an employee, and it has been, I suppose, ironed out exactly the definitions of this, and there is criteria to be met. But what I would be focusing on this particular person when they came to me was, is this company going to be your only client that you're going to be doing work for? And they said no. So that was the first box that I ticked. Okay, so there's consultancy business being set up with one client in mind where they have worked, but there's also other potential to work with other clients as well, which means that they can do that. They're not just limited to a specific customer and working with them for set hours, which wouldn't by default mean that they are actually an employee if you were to strip it down. So this particular business, or this particular business owner, came and said, just want to know the pros and cons of both. So we spoke about it, and the money that they're going to be involved, they're going to be paying an hourly rate for their services that they're going to serve out. As well as that, they can actually and hire people that are in the contract that they're negotiating. It's going to be through the company. So not only does the director have direct access to actually to do the engineer, the validation work, they actually can bring in people in order to do that as well. So that's another criteria which I would be essential when deciding whether this is going to be employer or an employee relationship. So just to watch those things when you're setting up your businesses. But in particular, they want to know, they want to set up a company. What's the best way of doing it? Can I help them? That's basically what the conversation revolved around. And I said, yes, best way to set up a company is go to a company formation business. So go to a companyformations.ie or a company like that that can set up a company for you relatively quick. And the reason why is because they can just buy it off the shelf. You need a one director, which would be yourself if you were setting up this. As well as that, you need a second person who could act as secretary. And they have roles and responsibilities in relation to this. However, they're not going to be impacted from revenue, so there's no additional taxation concerns to consider. So if you had, for argument's sake, your mum or your dad wanted to, you were saying, "Oh, I'm going to use them as my secretary," but I was worried that it might affect their OAP, or is it worried that it might affect entitlements? It doesn't necessarily have that link, because unless they're actually receiving a payment from the company, they won't be no other considerations apart from signing off on the statutory accounts at the end of the year, and of course CRO requirements for filing off your B1s. So there's no implication for it if you are considering, or you're wondering who you need to act as secretary. But once you've done that and you establish your business name, which you can check on the CRO website to see if something is available. Now, it doesn't necessarily, it has to be unique in regard to that. If you wanted to put in a business name and there's something very similar to it, you may not be able to use that name. So have alternative names as well. So in this particular case, they had two alternative names and the second one had to be picked, which was wasn't they weren't happy with, but it was the only way that they could get around it because the first one of something very similar had already been used. So they need to select a second name. Once the second name was selected and the constitution and all the documents are being drawn up, uh, it's the best way of doing it because you just pay a once-off fee to buy an off-the-shelf company. One thing to note is that when you are updating the supplier, the services that this company is going to be providing, you need to think long term. So if you're starting off, we're just saying this company is involved with consultancy services, which this one is in particular, you can't all of a sudden then in 6 months' time direct that business to start doing retail or hospitality because it's against the constitution, against the memorandum that you've set up. So you'd actually have to go back and amend that if you were to change the format of the business or what you were doing. So once the business has been set up, the company, you get the company pack sent to you in the post and you get your company registration number. And at that point, you have a company with the CRO. And that's the first thing. And I say it's been two separate identities, CRO and revenue. Being registered with the CRO does not mean that you are registered with revenue. However, in order to get registered with revenue, you need to be registered with the CRO. So it is a catch 22. But that's the first stage, getting the company set up. But you're still not able to trade at the minute because you need to get registered for taxation. So tax registration number needs to be applied for, and that's done through the revenue. You need to have your CRO number available in order to get that. So once you get that document and you have that available and it's online and it can be checked, at that stage, then we can register you for a tax registration number. Tax registration number is by default registration for corporation tax. But as well as that, you have the option of registering for other tax heads if you needed to. So, for argument's sake, this particular director wanted to become an employer or employee of the business. So, we would register for employers PRSI. They're going to have to register for VAT because they know they're going to exceed the VAT threshold within 6 months. So, they also have to register for VAT now. So, you get all these things done. And this usually it can take up to a week for the registration to go through, depending on the business. The VAT part of it can take longer, and there may be additional checks from revenue in order to make sure that this business is legit. So they may look for additional things like contract or services that you're going to be undertaking. They may look for a history of if you've done anything similar like this in the past. So there's that delay. There can be a small delay on the VAT side for that. But usually for corporation tax, POE, there's no delays, and this can be set up extremely fast. And once it's been set up, next thing to do is set up a business bank account and go into your local branch. Or what I'm noticing now is an awful lot more businesses are actually using online platforms, the likes of Revolut Business, etc. And they're actually uploading all their documentation to this and getting business bank accounts set up. One thing about this is that it's making it a lot easier for setting up sub accounts. I'm always harping on about sub accounts for your payroll taxes, for your VAT, for your corporation tax, that specific accounts dedicated to paying all these tax liabilities as they fall due. So it becomes extremely easy to move money around. And of course, we know from using online banking, the applications are actually quite good. So the apps are there in real time, especially with Revolut Business. There's some features on that you can actually do your reconciliations as you're going through. So if you're paying for something, you can upload a receipt as well at the same time. However, I wouldn't use that I would use a set accounting package in order to facilitate that. I wouldn't use it all inside the banking app. I would use a separate one just to make sure that if you wanted to use the banking, but also have the backup as well of having your own dedicated processes and procedures for gathering your invoices and doing your bank reconciliations and stuff like that. Okay, but once you have all that done, you're basically up and running. You're good to go. Now, when you are going to be setting up or sending your invoices, so a particular question came up saying that they were registered for CT, they were registered for PAYE, they were waiting for the VAT to come through, they had to send an invoice. Do they charge VAT on that invoice? And I would say, yes, you do charge VAT because you are registering for VAT. And if there's no issue or no reason as to why the VAT registration won't go through, when you get your approval, that would be expected to be paid on that. So I would start, if you are in the process or waiting for your VAT registration number to come through, I would make sure that you're not neglecting that you are charging your VAT. And of course, when the first VAT return is going to be filed, you actually declare all that VAT on it. As well as that, you also have the option to claim the VAT back on it. But saying that, get particular specific advice on the registration date. So if you're going to register on today's date, which is the 6th of February, so we're in a bi-monthly period, so January to February, you can't claim it back VAT from January. Even though you're in that in that VAT period, you're only going to be able to claim your VAT back from today's date on, even if you're waiting for the registration to come through. So just be particular when it comes to what dates you can claim back stuff, and of course, try and plan this in advance so that if you are going to register, you register at the start of a VAT period so that you can actually count or you can use the full VAT period for your purchase VATs, etc. A lot of consultant businesses out there don't have an awful lot of purchases, so they can actually push off making purchases and such until such time that their VAT registration has gone through, and then they can claim the VAT back on that. That's the one thing about consultancy businesses. Not an awful lot of raw materials goes into it. It's a lot of head knowledge, which is the main expense in that business. Right, we've the company set up, we've the business account set up, we're sending invoices. Also, we need to make sure that we're on the payroll. So use an online payroll solution or a payroll company in order to pay yourself. Pay yourself either weekly or monthly, and that is all tax deductible. So if you're charging out, we just say you're charging out 10,000 a month for your services and your wage is two. Well, that 2,000 is going to be tax deductible. As well as that, speak to someone in relation to setting up a pension for the company, and the pension is also going to be tax deductible. So these are additional expenses that reduce down that 10, because if you leave the 10 in the bank account, you pay taxes on the 10. So we want to reduce down the amount of money to an acceptable level or to the maximum level in order to pay the minimum amount of tax that we have to on that business. So PAYE essential to make sure that you're on the payroll. Having a pension set up as well as that. Are you entitled to claim any travel expenses from moving across, going out to clients' work, scope and work, charging for works like architects, engineers? They're constantly going, meeting new clients. They're going from here to there, and track all that mileage, because if the car isn't in the business, if you're using your private car for this, you can claim all this on the civil rates. So this is another tax deduction that you can actually implement to reduce down that corporation tax liability. As well as that, if you're going to be paying for all this, you get a few pound back. One thing to note is that any expenses you claim in your business needs to be declared to revenue at the time of payment or in advance of payment. So if you're working and you're claiming travel expenses, subsistence, this all needs to be declared to revenue at the time of when you're being paid. A lot of directors would pay themselves once a month because at that stage it gives them enough time to put together all their expenses. However, if you're being paid weekly, just make sure that you get your monthly expenses in at the time, as well as that for your accounts. If you're a December year end, just as well as that, make sure that you are declaring the account in the correct accounting period when the expenses are due, so that you can get the full tax deduction for that at that period. So that's a quick run through, hopefully in layman's terms, of how to set up a new company and the things that I would be pointing out for any new businesses out there who wish to get started and get invoicing. And of course, getting paid themselves, most important thing as well. So I hope you enjoyed today's video. And until next week, if you have any questions, just let me know and I'll address these next week or in a future video. But until I'm chatting to you again, you take care.